Good morning. This guy is here. This video for Tom Lee is saying market is going to correction at here.
How quickly the market narrative has changed from expecting a rate cut in June now to some economists saying perhaps not at all this year. You've been in the seat that Powell is in, different country, India, but still, I'm curious how you think he navigates this complicated scenario that we're in, which is hotter economy with inflation remaining much higher than expected, and at the same time, rates also staying higher, the impact that could have on consumers.
Yes, I mean, clearly what's happened is we've had three strong readings of inflation. One you can dismiss, certainly the January one, but the next two basically suggest inflation is not coming down. In fact, it's going up. And if you look at the measure that the Fed has looked at most closely, which is the super core measure of inflation, taking out housing, it's gone up at an 8.2% rate over the last 3 months. So this is something to worry about. Is inflation coming down steadily as it seemed at the end of last year, or is it having a new set of legs and moving up? So my sense is, they're going to do what they did, which is watch and wait. But you heard, New York Fed president talking for the first time about potentially rate hikes. I think that's still some ways away. Serious talk about that. But clearly, the kind of rate cuts that were expected are off the table. Certainly, in the next meeting, they have no more news on inflation or the labor markets, and it's likely they will continue pause.
Sir Rajan mentioned John Williams, New York Fed president, who did just mentioned rate hikes, but he just said that's not his base case. But even the fact that he mentioned it, you saw the 2-year move to around 4.99%, which is a high for this year. You still have this notion that stocks can continue to outperform if rates stay high. How long do you think that theory will last?
Well, I think it's going to be valid as long as one of several things happens. One is that as long as the economy remains resilient and robust, and so far earnings have actually been coming in quite good. I mean, we're only sort of at the start of earnings season, but already Q1 looks good. And I think the second is that inflation, I think inflation really has a bifurcation taking place, because even as the professor cited Supercore, the reason Supercore is annualizing at 8% is auto insurance. If you took if you took auto insurance out of Supercore, the long-term average is around 2.7, and it's actually annualizing at around 2.7% right now. So the biggest driver of inflation are the two stubborn components of auto insurance and shelter. So I don't know if Williams really wants to be raising interest rates or hiking just because auto insurance rates are high. And I think the third thing to keep in mind is that we don't really need the Fed to make, 3 cuts. I think the one risk to markets would be that the inflation is accelerating to the point where the Fed has to hike and therefore really weaken the economy. I think that's still very much a tail scenario, but that's the one, of course, that would unsettle markets the most.
Professor Rajan, how critical is China's recovery to global economic performance?
Well, it certainly is very important, right? China has been the engine of global growth for a long time, pre-pandemic. But I think it's also important for, the reflationary forces we're seeing. I mean, if you look at commodity prices, they were largely dead in the water for the last year because China wasn't performing up to expectations. As Chinese growth news is getting better, you're seeing some commodities perk up. Certainly, you're seeing copper pick up some in recent weeks. So my sense is that the deflationary effects of China, which have been substantial, especially on the goods side, may abate a little bit if Chinese growth picks up. And of course, it will also add to global demand, which is important.
90 years ago, Jameis Henderson began investing on behalf of our first client, Alexander Henderson. Today, we're helping millions of people to invest in a brighter future together. Explore the opportunity at JanisHenderson.com.
Yeah, so guys, that's the news for right now. So market is crashing. I'm looking here micro super micro computer. It's down 20%, but when you see year to date, it's still more than 551%, which is you buy this stock early, you are still on profit. So most of stocks coming down, anything dealing with AIs, anything Nvidia, AMD, Sound.com, like market is going correction today. And yeah, so guys, thank you so much and have a nice day.